Is fundamental analysis worthless? In this video, you're going to learn my thoughts on fundamental analysis. You're also going to learn why in the beginning, when I first started investing, all I used was fundamental analysis, and why now I never use it. So, in my opinion, I definitely believe that fundamental analysis is worthless. And before you attack me, please realize that I do have a pretty strong foundational basis for my opinion, because I worked as an investment banker for a long time. I worked at Morgan Stanley, not as an investment banker, but I worked at Morgan Stanley. Then I worked at CIBC World Markets in their Industrial Growth and Services group under Mark Henkels. Then I also worked at Petsky Prunier, which is a mergers and acquisitions boutique, and they're actually some of the most active and prolific investment bankers in the entire industry. When I was an investment banker, the only thing that we used to evaluate companies was fundamental analysis. We would only price companies on EV to LTM EBITDA, which is enterprise value to LTM EBITDA, which is your last 12 months EBITDA. Then what we would do is we would look at the precedent transactions and then assign a multiple to the last 12 months EBITDA to get a ballpark figure for what a company was worth, and then we would run an auction, and whoever paid the most money for it, that would be the winner. So essentially we would look at the last 12 months of the company's cash flow, we would make a few adjustments, we would look at the precedent transactions to get the multiple, and then we would run an auction. Now this worked very well for private companies, and it worked very well as an investment banker. However, for public companies and as a trader and as an investor, the fundamental analysis, in my opinion, is not going to help you at all for a few reasons. First, fundamental analysis always looks at historical data. It doesn't look at the future or the present moment. When you're trading, the stock market is always forward thinking. So the stock market doesn't necessarily care so much what the company did 1 or 2 quarters ago. Instead, what it really cares about is what the next earnings announcements are going to be and what the future prospects are of that specific company. So there's a clear contradiction between how the market values a company relative to how investment bankers value a company. Fundamental analysis looks at the past, whereas the market looks to the future. Now, I know a lot of people are going to say that they're just going to find undervalued companies and then buy it and then sit on it. The problem with that is that you're essentially hoping that the market recognizes its own quote unquote mistake. But the reality is that the market probably knows significantly more than you do. So for you to think that the market is not pricing a company correctly, then you are betting that you're smarter than the market, and all that hundreds of millions and billions of dollars that are chasing that stock, that they are wrong and you are right. And yes, while it's definitely true that the market can end up increasing the value of a stock that you're sitting on that you felt was undervalued at the time that you bought it, what more likely happened was that new developments came out which changed the perspective of that specific company in the market's eyes, and then the market has started attributing a higher valuation to that underlying stock. So I definitely do not believe that looking at fundamentals and balance sheets and then trying to make a determination that it's undervalued relative to where it's currently trading at is a good strategy. A lot of people have gone broke that way, and I definitely do not believe that you should do that. And I think that the better thing to do is, if you just look at the recent trading range and you think that a company is undervalued relative to where it should be or where it was trading in the past, then you could just simply buy it. Like for example, Amazon was trading just about 6 weeks ago at over 3,700. Currently is trading at 3,250. I think if someone were to buy Amazon at 3,200 or 3,250 right now, I think that there's a decent chance that 1 year from now, you're gonna be up money. I don't think that's rocket science. So if you want to do something like that, I think that's totally fine. When people try to buy stocks that they believe are undervalued, you're essentially acting as a cheerleader and you are giving away your power to the market. You're essentially saying that you believe that a stock is undervalued and you're just going to hope that the market recognizes this, and eventually you're going to end up making money. You might make money, but you might not. Someone else might bring up and say, oh, well, Warren Buffett is huge on fundamental analysis, and that's pretty much all he uses. Well, I have two comments on this. First is none of us are Warren Buffett. And the second, probably even more important, is that Warren Buffett buys solid brands. He's bought Wells Fargo. He's bought American Express. He's bought many solid brands. And brands by themselves are incredibly valuable because when you think of shoes, what's the first brand that you think of? Most people think of Nike. In fact, I heard something which said that more people search Nike than they do footwear, or more people search for Nike than they do for shoes. I don't know if that's accurate. Anyway, the point of me saying this is that brands are incredibly valuable. And I think it is definitely valid for you to buy really strong brands that are trading at a discount. So instead of spending time researching and reading the 10Ks and the 10Qs and trying to make a determination on what's undervalued versus what's overvalued, just buy really solid brands at good companies and you should do extremely well. David Jaffe with BestStockStrategy.com. Please like, comment, share, and subscribe. Click the notification bell so that you're alerted when new videos come out. Thank you very much for your attention, and I appreciate you watching this video.